Welcome to Bears in Exile. Today is Monday, July 23rd, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, and everything else that we look at every night. So, it was a nasty weekend news with essentially the writing on the wall being in for our friends in Greece. And so, came in today looking terrible. Sure enough, it was down huge at its, crescendo, inverse crescendo. And, for a moment, things looked bleak, looked like it could go right off of the cliff. This was it. We're going to take out the previous support, and wouldn't you know it, hour, two tops into the trading day, everything turned around, and, the clouds parted, and Obama flew off into the sky, and everything was alright. So, still have a nasty-looking daily chart. It is, the outlook on it is red, just like on Friday. We've been watching the 14-day move on over. We watched the finish of the stochastics reach the top, and now they're trying to turn. There's nothing really to add to all of this that we already know, which has been coming the last few videos. But, and we still don't have a bearish cross. Now for the interesting stuff. Okay. So essentially everything ticking down. We ended with a hammer today. That's nice. Possible reversal signal. The more important thing was that we had the downtick on Friday, and we noted that it was not complete. So we already knew that there was some more down in store, or at least in order, and that was completed today. So bubble corrective move finished, downtick finished. Now we can see where it wants to go. That's how it works, and we ended right straddling the long-term moving average flatline. It's not a bar anymore, it's flatline. So really, more than perhaps any other day in the past few weeks, this really is the as neutral as you can get. Of course, it's colored poorly because all of the indicators are positioned extremely well in the daily time frame for further downside, but from a positioning standpoint, from a candle standpoint, from all kinds of different standpoints, yeah, right now this is as neutral as it gets. So we really have to see what happens tomorrow. And speaking of tomorrow, 60-minute time frame. You can see the nasty drop. Had a little bit extra, and within just over an hour, everything just floated on up. Notice it took out the halfway point of the candle, and I'm not sure, let's see here, I guess that would be right about here, and closed right at it, pretty much, roundabout, which is pretty interesting all by itself, which is also says neutrality to me on it. We can see the MACD histogram moving on up. The MACD itself going sideways by the end of the day. Go either direction. So histogram up, MACD sideways. RSI sideways by the end of the day. Stochastics up, CCI up, 14-day RSI moving average down. Already past the halfway mark. So, we could have the 14-day turn, in which case it's going to be positive. We could have the secondaries finish their move to the upside, turn around, and join the 14-day on its way down, in which case it'll end up negative. This looks to me to be more positive in the short term than negative. Could end up being negative by the time they do their reset. It all comes down to the 14-day and if it's able to turn or not. So, push-pull, definitely more negative in the daily, definitely more positive in the 60-minute. What a broken record that is. We've been having that for a while, but at least it's been moving one way or the other to fulfill both of the requirements. So it's not something really to complain about. I'm not going to see too much difference in the SPX. Slight differences. For one, nasty open. This one closed above the long-term moving averages. That's better than the Dow. We have everything moving on down. The daily is definitely bearish. And we completed the downtick that was not resolved on Friday. Now I have to see what happens next. And the 60-minute time frame, just like the Dow, more positive than negative in the immediate term. Very interesting. Moving on to the VIX. This one had such a promising open, gapping above the major price consensus level, getting back into the 20s, very important number, and falling apart essentially the whole day, closing inside of the long-term moving averages. And we're already really darn high on the CCI in the daily. Stochastic's 14-day RSI moving average moving up on the RSI, up on the histogram, up on the MACD, getting a bullish cross. And what's there to say? Definitely more bullish than bearish. Definitely not perfect, but certainly not terrible. And this one should look not so great in the 60-minute time frame if the SPX and Dow are to be believed for the immediate term. And sure enough, we have the CCI moving down, Stochastics moving down, MACD histogram going down, MACD still ticking up, RSI still ticking up, 14-day RSI moving average ticking up. This is more questionable than the Dow or SPX 60-minute chart in that it is not just begging for red. So we need more. We need more. Moving on, TNA. And TNA, awful day. Very interesting though. I had drawn this line days ago, and just playing around connecting these two bottoms. And once you know it, it went down, touched it, and backed away from it today, ending with a green hammer, ending right at the upper price consensus level, gapping below the 200-day moving average. This is a really nasty chart. I mean, if it breaks this, then I would expect this previous low to be tested just above 46, especially if it's able to break the major price consensus level for this month. Beyond that, everything moving down. It's an ugly, ugly little chart. Now, one thing that's interesting to me, I'm going to go to the 180 minute. And I'm going to go to point something else out, which I think is interesting. And the reason why I was drawing that ascending line a few days ago was because I could see a head and shoulders potentially. Very clear left shoulder, head, right shoulder, connecting all these pivot points to make it really legible. And I was just thinking to myself, well, it's kind of a long shot. I mean, we were up here. And I said, well, if I make a neckline, just be nice information to have. Very, very interesting that that's exactly where it went today. Bounced off of it, which you're supposed to do at a neckline. But troubling. Yeah. And going to the 60-minute time frame. Do we have a potential bear flag? Yes, we do. and it's right above the potential neckline. We do have the MACD histogram, the RSI, the stochastics, the CCI, all trying to work themselves off. 14-day RSI moving average is still moving down. So in the immediate future, yes, definitely more positive, 60-minute time frame. But if that is a head and shoulders, if it is, what are we looking at? Well, we're looking at, I'm just going to round it off just because it'll be easier. Somewhere between $10 and $11 from this point. That would take us all the way down to here. And that point, and how far back do I have to go? Look at that. That lines up right here with the December 14th of this previous year on the dot. So, something to be on the lookout for, aware of. Could have a really nasty move down. I'm not saying it's going to happen, it's just a possibility. But, whew, man oh man, that would be ugly. Just food for thought. Oof. Going on, UUP. Help if I get in the right time frame. There we go. Making a new high. How about that? Backing away from being outside the upper Bollinger Band. You can see the constriction of the Bollinger Bands as they come in. We're going to have a big move soon. Could be either direction. And everything is moving up with the exception of the RSI going sideways. This is definitely a bullish chart. New high, very bullish. Even though it was red essentially the whole day. Giant fat body spinning top. This is a very positive move for the dollar. And this should be retested at some point, even if we back away and fill this gap first, which I think would be fine, maybe even healthy at this point. But nonetheless, that is pretty darn bullish. And FXE making a new low. We knew there was problems on Friday when we made a new low. It's definitely bearish. We knew it would, at the minimum, need to be retested, and it did it in spades. Beyond that, closing right at the lower Bollinger Band. And everything heading down with the exception of the RSI and the slow stochastic. Kind of interesting too, because we had noted that even with the fast racing up here, the slow stochastic had not participated in that really. So having it come back, it makes a lot of sense. Where could a bottom to this be? Well, it's a multi-year low, so actually backing it out that far probably doesn't really matter that much. Although we do know that the Dow and the SPX levels, we pointed that out in a previous video. So we know if the true value of the market was to revert to the value of money, it would be much, much further down than where it is now. CompQ, the NASDAQ, ending with a hammer. Maybe a pivot low. If it is, then it continues the series of higher lows. Can't really draw a good trend line here because there's no real straight shot that connects all of these bottoms. We could make one that connects from here to here to here. That'd be a little bit messy, but I just don't think that that's clean enough. Could you say, oh, we have a head and shoulders here, left shoulder, head, right shoulder? Yeah, you could. Don't really have the best neckline for that, though. I guess I can play around a little bit. Try to make something that sort of works. Actually, I guess that kind of works. Anyways, that's kind of a long shot, but definitely bearish in the daily. Certainly possible reversal below the long-term moving average bar, below the upper price consensus level, and everything moving down. This is a very bearish chart with the exception of the candle. And 60-minute time frame. Is this one overheated? Well, ascension on the MACD histogram. MACD still ticking down. RSI going sideways. Stochastics up. CCI up. 14-day RSI moving average down. More positive than negative. What was there to say beyond that? If we're able to get a complete gap fill, that'll be a very key moment. Key moment. Going on to Apple. Apple was looking pretty darn scary at its lowest, going deep into the long-term moving average bar, but it was able to shoot back up, get back inside the lower Bollinger Band, and have a decent close, almost, just barely lower than Friday's close. Not a bad showing. Everything is lined up and heading down in the indicators. Everything. We even got a downtick in the 14-day RSI moving average today. Tomorrow is earnings for Apple. That will be fascinating. I have no idea how it's going to do. 60-minute time frame with that rapid ascension. You can see here. Does it have more in the tank? Well, it worked off its bottoming area in the heat map, but we still are moving in the histogram, the MACD, CCI, stochastics. The RSI and the RSI actually are leveling out, but and the 14-day RSI moving average is moving down. We do have more that we can move in the MACD histogram and the stochastics, but certainly they don't have as much as some of the other charts. Going on to GE, should foretell what the Dow is wanting to do. And it had a really nice day, clearing the long-term moving average bar, clearing the major price consensus level, disagreement on the stochastics, 14-day RSI moving average heading down, CCI up, RSI up, histogram up, MACD up. This is more bullish than bearish, and it is bullish engulfing the real body or lack thereof of the one on Friday. Friday we were talking about this being a absolutely crazy candle. Haven't seen that in a very long time in recent memory, and closing right at the major price consensus level. Needed to see what it would want to do next. A supreme indecision candle, and this is a pretty strong message today. One of the reasons why I am not counting the bulls out at this moment and coming back from the brink in a pretty spectacular fashion. JP Morgan, most important bank. Bullish engulfing. We have lots of disagreement in the secondaries. MACD going sideways, histogram slightly up, sideways on the RSI, up on the CCI, disagreement in the stochastics, 14-day RSI moving average poised for a big move down. I would say slightly more bullish than bearish, simply because of the candle and its engulfing. But I mean, really, even if this is bullish in the daily, we know what kind of trouble it has with the long-term moving average bar recently. So it has 50 cents to go before it runs into problems again. So even though this is bullish, I don't place that much faith in it. And it did make a new recent low today. So very interesting. GLD, still nothing to say. It's a spinning top today. And the secondaries are all over the place. There's nothing to be gleaned from this. This is still just nonsense and garbage. SLV. The secondaries are definitely more bearish than bullish. The candle is not as healthy. CCI is down. Stochastics mixed. Up on the 14-day RSI moving average. Down on the RSI. Down on the histogram. And sideways on the MACD. This is definitely more bearish than bullish. Definitely more bearish than gold. So that is interesting as well. And what else? XLF. The financials. Clobbered upside the head, outside of the lower Bollinger Band, kissing the 200-day moving average, bouncing, which it should, making a new recent low, and everything aligned for a down move. Ugly, ugly chart in the financials. I don't know how much further this will bounce. We do have a gap here. We do have a gap here. And we have a little bit of a double gap right here. So I would think that it would need to bounce right here and then probably fall apart if we're going to get a bounce. That's my guess. And USO, oil. Wow, we got a downtick today, and it was resolved intraday. We now have to see what it wants to do next. When oil is bullish, the market is bullish. Oil was definitely not bullish today. Neither was the market. And almost everything ticking down or ready to tick down. 14-day RSI moving average, the only holdout. Definitely bearish. And I haven't done a Vegas baby in a long time. I'm going to zip through something really fast. Could be totally wrong on this. MGM. Making a hammer, possible reversal. Bottom of a very long range. But everything is ticking down. So it is in the daily definitely more bearish than bullish. But very interesting. And we definitely have positive divergence going back long stretches of time. Long, long stretches of time. LVS more of the same. Super low, hammer, positive divergences all over the place. Everything is moving down. Definitely more bearish than bullish in the daily time frame. Be interesting to see how it plays out. Win, more of the same. Small hammer, new low, bottom of a range, and it'd be nice if it had a volume spike, but it doesn't. Positive divergences all over the place. And Walmart. This one is fascinating. I'm just waiting to short this thing, this little monster. I'll show you something really interesting. Had the super nasty down on Thursday. Came up on Friday. kind of screwed around today. Most everything is aligned for a move down. And I did the Fibonacci levels from the top to the bottom. We have the 33, or the 33, the 50, 66 on Friday came up, stopped at the 66. Today stopped at the 50. I think this one is going to fall apart soon, but it seems to do good on bad news days. So very, very interesting, but weak as it continues to lose levels, and that drop should spook anybody. And is there anything left? I think that's about it. So, right at the precipice. Are they going to run in and do something to save it? There certainly hasn't been any damage control as of yet. And if there is, how will the market react? Can we make a new recent high and continue this trend, this crazy, crazy trend of ascending highs? Or can we finally break a recent low and break this whole little cycle of ascending lows? Tomorrow we may know. And tomorrow is Apple. So important. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.